Welcome to our group presentation. In this video, we will be discussing a very important issue involving nation's largest Islamic bank, which is Bank Rakyat. Recently, the bank has faced several governance and legal challenges, and these problems are more than just internal matters. They raise serious questions about transparency, accountability, and the effectiveness of the internal control within the institution. When a major bank experiences these kind of problems, the impact goes beyond the organization itself. It can influence public trust, customer confidence, and even the stability of the financial sector. In this presentation, we will explore what exactly went wrong, why these governance failures matter, and what lessons can be learned to prevent similar issues in the future.
Okay, my name is Aizat Ishraf bin Anwar. Matric number is 301794. So, as you many know, Bank Rakyat is a member-owned cooperative bank operating under the Cooperative Societies Act 1993, the Banking Act, and Sharia Governance Framework. Over the years, the bank have faced many criticism for weak internal controls, questionable decision making, and political influence, which have raised concern among the public about the transparency and accountability of Bank Rakyat.
Hello everyone, my opinion is one of the most discussed cases occurred in 2014 involving allegation of irregular approval of large loan repayment agreement. Reports suggested that some senior officials might have bypassed normal lending procedures and used their discretion improperly. Although no criminal charges were made, this scandal attracted public debate and prompted the government investigations.
Assalamualaikum and very good day to everyone. I'm Nur Asrawi binti Ayub Khan with matric number 300344. As you can see here, there is a news clipping attached which was taken from the official website of Astro Awani. This news clipping here shows the governance issue which was discussed and revealed in this 2014 case of Bank Rakyat. This situation highlighted the serious governance weaknesses, especially regarding conflict of interest, role of board of directors, and the independence of the internal audits. Conflict of interest, which is the decision influenced by personal or internal agendas, and about the weak board oversight is the senior official bypass the proper procedures, and about the internal audit gaps is the lack of independence which reduce the detection of irregularities. The scandal also reflected how poor the governance at cooperative bank level, which can impact trust nationwide. This is because weak governance, they undermine confidence of the nationwide. As this government response, investigation would be launched to restore the transparency.
I'm approving this large loan for the company today, and I believe it's urgent and cannot wait for the usual procedures.
Hold on. According to policy, this approval must follow proper checks. Skipping them could put the bank at risk and affect our depositors.
I am worried if the internal control are ignored, my saving and interest are in jeopardy. How can I trust the bank?
As the government investigator, we have officially received multiple complaints regarding the approval process. Because of this, we are conducting a detailed review to ensure every step follows proper compliance and fairness. Our focus is on improving transparency and strengthening accountability within the system. Ultimately, our goal is to restore public confidence and ensure that all decisions are made with integrity and also clarity.
Hello everyone, I'm Logeshwari Mariarasu and my matric number 301900. Now I want to continue this presentation. The key causes behind Bank Rakyat's governance issues can be traced to three main weaknesses. First, human error played a significant role where mistakes and oversight failures created gaps in proper governance. Second, there was too much discretionary decision making by senior officials. This means that important decisions were made based on individual judgment without sufficient approval or monitoring, which increased the risk of misuse. Third, the bank had insufficient internal checks. Weak internal controls made it easier for improper actions to go unnoticed. Together, these weaknesses created space for potential conflicts of interest to occur, ultimately affecting transparency and accountability within the bank. These
The effects were serious: loss of public trust, reputational damage, and government audits. In response, Bank Rakyat implemented corrective actions, stricter credit risk management, enhanced Sharia supervision, tighter financing approvals, and independent audit systems.
These reforms played a major role in restoring public confidence in Bank Rakyat. They also ensured the bank follows necessary legal, ethical, and regulatory standards, which is crucial for transparency and accountability. As a result, the bank is now better protected against operational risks and potential legal challenges in the future.
In conclusion, the Bank Rakyat case shows that weak governance and poor internal control can affect not just the bank but society as well.
So in conclusion, I think we all can agree that proper adherence, Sharia governance, and ethical standards is essential to protect our depositors and also our shareholders.
Corrective measures and transparency are key to restoring public trust.
This case also teaches students and future bankers the importance of governance and accountability in the financial sector.
Even though challenges exist, Bank Rakyat's reforms demonstrate resilience and commitment to responsible banking.
Thank you for watching our presentation. We hope this case helps you understand the link between law, ethics, and banking operations.
Good day, everyone. I am Dashini Subramaniam. There is three members. I am the member one. Member two is Mahasri. Member three is Noor Asrawi Binti Ayub Khan. Welcome to our short expert forum on governance and legal issue in Bank Rakyat. Today we have a simple objective to understand what went wrong and how it affected stakeholder and what lesson can be learned. Let me begin with the brief overview. The governance failure in Bank Rakyat mainly occur because certain senior officers had too much discretionary power, allowing them to approve high-value financing without proper documentation. Internal control were present, they were not enforced, and internal audit lacked independence to escalate issue effectively. There were also signs of external influence, including political pressure to defy decision making. When everyone's structure cannot resist external interference, the risk of misconduct is high. This situation reveals major weakness in oversight, accountability, and internal monitoring. With that, I will now invite Member 2, Mahasri, to discuss how this failure impacted the stakeholder and the public.
Thank you, Dayashni. The governance issue had a significant impact on key stakeholders. The most affected were depositors and cooperative members who began losing confidence in the bank's ability to protect their funds. For a cooperative institution like Bank of India, trust is everything. Once shaken, it can take years to rebuild. Employers also face internal pressure and uncertainty, especially those who had to answer customer questions without having complete information. Regulators such as Bank Negara Malaysia had to intervene quickly to investigate and ensure corrective actions were taken. Because Bank Rakyat is an Islamic cooperative bank, the incident also raised concerns about credibility of Islamic finance as people expect a high level of integrity from area-based institutions. Overall, the trust deficit created by this scandal affected not just the bank but the broader financial ecosystem.
Thank you, Mahasri. Now I'm inviting Member 3 Nur Asrawi binti Ayub Khan to present their view.
As a risk management and Sharia governance specialist, thank you. Moving forward, several improvements can prevent similar issues. First, Bank Rakyat needs stronger segregation of duties so that no single officer has excessive authority. Internal audit must be fully independent and empowered to report directly to the board without interference. Second, adopting more technology based control can reduce manipulation. For example, like digital credit scoring, automated approval system, and system lock documentation. These tools ensure every loan decision is transparent and traceable. Lastly, strengthen Sharia governance is very crucial. A proactive Sharia committee can provide ethical oversight, ensure decisions align with Islamic principles, and also detect irregularities early. Combined with a stronger whistleblowing system, these measures help create culture of integrity and also this transparency.
Thank you, Ms. Asrawi and Ms. Mahasri, for the insightful thoughts. To conclude, the bank racket case teaches us that strong governance, ethical leadership, and proper control are essential to maintaining trust in any financial institution. Thank you for everyone for joining our forum.
So we would like to go deep into Bank Rakyat's legal issues. So first and foremost, it was weak internal controls. So what is weak internal controls? It's basically some loan approvals and financing decision were reportedly made without proper oversight. The regulatory scrutiny revealed that gaps in the internal risk management is always high. So they should take a better look at it before giving loans. So next is political influence. Allegation that make political connections influence decision making, undermining independent governance. So there are rumors spreading internally that there are political influence. There are some big names that influence the decision making amongst the BOD, Board of Director, or among the upper tier management. So the third one is questionable loan decisions. So cases where loan approvals lack proper documentation. So the highlight of this is loan repayment disputes raised in public reports. So there are a few cases which their loan is doesn't be repaid by their customer, so it is default risk right there. So they should take a better look at it before approving the loan. So the last but not least is the most concerned part. It is transparency and accountability concerns. So public and regulatory criticism for unclear reporting and insufficient board oversights. So I think that is the four most main concern of Bank Rakyat legal issues. So I would like to briefly touch on Bank Rakyat. So Bank Rakyat established in 1954 under the name of Bank Agong. So it was renamed from Bank Kerjasama Rakyat Malaysia to Bank Rakyat in 1968. So it was the largest cooperative bank in Malaysia. So it owned by its members because it operates under Cooperative Societies Act 1993. So it was guided by Sharia compliant financial principles. So it provides a few services such as SME financing, personal financings, deposits, investment services, debit cards, and more. So Bank Rakyat also known for its personal financing PFI, a very popular financing product. So the obvious strength of Bank Rakyat is its financial strength. It frequently record a strong annual profits and high dividend payout to their members. It has wide branch network across Malaysia. So in terms of Sharia governance, all products follow Islamic banking regulation and supervised by an internal Sharia committee.